Money makes the world go round. Old news, right? But here's the kicker. The M2 money supply tracks every dollar in play from your wallet to the bank vault. And guess what? It's quietly calling the shots on whether markets tank or pump. Money flows in and out of the market are having a massive impact, and it's trackable. We're going to be talking about the impact and where we could be going next because of that. So stick with me as we unpack this under the radar indicator and crack the code to max out your crypto gains. We've talked about M2 before to a nauseating degree, but we never actually made a full video on it. For those who missed the conversation previously, here's the deal. The money supply comes in a few different flavors, 3 M's to be exact, though there are more, but these three are the big headliners. M1 is the cash in your pocket, coins, checking accounts, things you can spend right away. M3 is the big shot stash, long-term savings, institutional funds, not quite grab and go kind of money. Then there's M2, the Goldilocks of the bunch, the one that's tracked the most by all big sort of financial analysts. It's basically the M1 plus almost all the cash like savings accounts, money market funds, all that kind of stuff. M2 is the global tally of ready to spend, ka-ching, ka-ching in circulation. The higher it goes, the more money is available for spending and investing. Risky assets like stocks, Bitcoin, rest of crypto all vibe pretty well with inflows of the global M2 supply. When liquidity comes in, that money tends to chase higher returns beyond sleepy old bonds. It's pretty simple. Human psychology dictates that when we see a lot of money, we spend more, which is good for company stocks or for investing in riskier assets in the hopes of multiplying what we've got. In short, more money in the market feeds greed in the market, which rises risk assets. Now, when we check out the money supply, here's the deal. There's global M2, a pretty big messy stack from the money supplies in China and Europe and the USA. M2 is tracked tightly by the Fed. The US isn't the whole ka-ching ka-ching show here, but it's the big kahuna of the show. When it sneezes, economies halfway across the planet start sniffling. When the US catches the flu, you bet that other countries need to go to the ER. Now, before we get into exactly how this is going to affect your crypto bags, I want to take a moment to let you know how you can get $50 for free with Femex, one of the top crypto exchanges. Look, markets go up, markets go down, but you can trade both ways and make money both ways. Even if it feels a bit dirty making money shorting sometimes. And the OG exchange, Femex, is a great place to do it. It's available to everyone, everywhere. It has deep liquidity, all the top trading pairs, and currently they're running a crazy promotion that you may want to take advantage of. So you get $50 for free just for signing up using the link down below. You'll get a 20% deposit bonus. So you deposit $1,000, get $200 back, as well as a $1,000 trading bonus. Pretty damn cool, right? All you have to do, use the link down below to start your account and you'll be eligible for all of those bonuses. Go check it out if you're a trader and you want to be trading in the markets and taking advantage of that offer, but also of all the trading opportunities available. Go check it out. Okay, so to give us a better idea of M2's correlation to risk assets in the economy, let's look at examples of how it's affected economies around the world. Between 1991 and 2001, Japan experienced what is often referred to as the lost decade, a period during which we had prolonged economic stagnation and deflation following the burst of its asset price bubble in the early 1990s. During this period, the velocity of money declined significantly. This decline in velocity indicates that money was basically not circulating effectively in the economy. You had a hoarding, right? Businesses and consumers reduced their spending because they're afraid that there might not be more money tomorrow. They reduced investments due to economic uncertainty, due to inflationary pressures. People got scared and pulled back. Now, this is all understandable since fear of further economic instability led to a preference for saving over spending, particularly on non-essential items. Now, following the 2008 financial crisis, which affected everybody everywhere, and was an event that was largely triggered by the subprime mortgage crisis, we saw the Federal Reserve and other central banks around the world step in and implement a program of quantitative easing. This indirectly and slowly boosted M2 by continually injecting liquidity into the financial system, thus encouraging lending and broader economic activity. and it largely worked. This policy played a pretty significant role in stabilizing the global economy and contributed to the longest economic expansion in U.S. history, which lasted from basically June 2009 to February 2020. Now, during the coronavirus pandemic, M2 levels did not decline. Quite the opposite. The intervention of the Federal Reserve and other central banks around the world, well, what did they do? They cranked up the metaphorical money printers, baby. They just print it digitally. Push the button. Now there's another $1 trillion, flooding the global economy with liquidity to counter the effects of what was going on in the economy. In the USA, M2 experienced a historic year-on-year growth rate of 26.9% in February 2021, which is an unprecedented expansion, which is fueled by massive government stimulus payments. And it increased personal savings and massive asset purchases by the central banks. Now, this surge in liquidity had a pretty profound impact on risk assets. You see, the S&P 500 reached multiple new highs as investors embraced riskier investments. Money was easy. Money was everywhere. People were gambling on dog coins. Bitcoin also rode the wave of liquidity, making two major peaks in 2021, $63,000 in April and $69,000 in November, which ultimately was the cycle top, although that was actually a period that liquidity was starting to decline already. So really the big first top, around 63, 64K, aligned with global liquidity. In 2022, the Fed signaled rate hikes and quantitative tightening, thus pulling money out of the system. Of course, this would affect the money supply. The M2 plateaued. It even dipped by year end. Bitcoin also bottomed at 16K in 2022. So, what's going on today with the M2 money supply? Well, according to Forbes, since the start of 2025, the global M2 money supply covering 21 major central banks has seen a notable 3.8% increase, which is a lot of money. 3.8% may not sound like much, but it's a lot. It climbed from 102 trillion to 107 trillion by the end of February. And last week, there was an extra $1.5 trillion of liquidity injected from places like China and Germany. And here's the good news. Historically, this kind of liquidity shift takes anywhere from 60 to 70, maybe 80 days or so to ripple through and impact the price of risk assets, Bitcoin, and other things. With that in mind, then April is shaping up to be a month to watch closely. Another analyst, Colin Talks Crypto, he thinks the M2 will push us to the next phase of the bull market. He's tracking Bitcoin's 72-day lag with the global M2, and he believes that by the end of March is when we start to see fireworks, which would generally line up with what we've seen before. You might have seen this chart here as well from Moonshilla. It shows that the M2 is crossing the 100-day exponential moving average, which suggests a Bitcoin pump. Historically, that's what's happened. Will it happen again? Who the hell knows? Maybe macro is just too much of a runaway train right now. But it happened in 2016. It happened in 2020. Third time lucky. This time different? Let's see. This all gives credence to the thesis that an increase in M2 correlates with Bitcoin's price movement. And we haven't seen the peak yet. Now, aside from this, I also want you to look at this chart here from B Geometrics. The black line is Bitcoin, or the blue one is the M2 money supply. I want you to pay attention to the green area. That's the global M2 year-on-year growth. Do you see a pattern? The spike in year-on-year growth is closely related to the cycle peak. Now, in the 2013 and 2017 cycle tops, they were actually lagging indicators. But Bitcoin is very new back then. It was a different marketplace. In 2021, it peaked before we reached the $63,000, $64,000 mark, which for some was the real cycle top. This was when the Pi cycle top indicator and all that stuff happened. The 69K later was just a bit of a fugazi, if you will. Also, when it is in the negative zone, that is one of the best times to buy, as assets are most distressed at that point. So you might want to keep this in your toolbox for the bear market and have a look at it later when we see, of course, a big decrease here. So look, what's the play moving forward here? Is there any hope for your risk assets, your Tesla stocks, your Bitcoin, all your altcoins? Well, look, Bitcoin's been having quite the ride recently, hasn't it? You've probably noticed. But M2 right now, hopefully it's got our back. The correlation's pretty damn high. My guess is we still have gas in the tank. This growth scare will blow over sooner than people realize, especially if we get a good inflation print this week where inflation's coming down. It's going to add fuel to the fire for more rate cuts coming. Now, according to Lynn Alden, Bitcoin correlates with M2 moves 83% of the time. In fact, a lot of assets do. Take M2 and Go put it over a Tesla chart and you'll see exactly what I mean. Very similar story. So it's not just Bitcoin, okay? Rising money supply lifts all assets, unless Trump's just broken everything so much that none of it's going to matter, and we're in that 17% of the time when it doesn't correlate. If we correlate, which the odds heavily favors, an 83% chance that we're going to correlate with M2 right now. Maybe the contrarians are going to be right here. Sometimes they are. You have to understand those are the odds. But if M2 correlates, then crypto markets will likely start uptrending in late March or early April. Based on current M2 projections, we could see markets top around late May or early June, assuming that M2 is not just simply keep pumping like mad. We've had a big pump recently, but maybe we peak out in the not so distant future, and that then marks a late May, early June top. But if we keep pumping even further, that actually extends the peak out even further. So maybe we end up topping, if it just pumps right through the end of the year, maybe we don't top till the end of the year. Now, if M2 pulls back in the next few weeks, that would also align with a summer boring period. Again, you gotta think a few months out, because that's when the impact of all this money percolates itself down to the economy. And of course, this is not even counting wild cards like a strategic Bitcoin reserve, the dollar index taking a massive dive, which usually lifts Bitcoin when it happens. Again, not always. There's still a lot of economic bullshit and macro worry going on that we have to sort through. That's a discussion for another day. Look, here's what I'm thinking. My Bitcoin stash, currently locked up tight. Currently not planning on selling any of it anytime soon. Maybe I'll take a little off the table just for the lulls, if it gets up to 150, between 250K, something like that, to rebuy lower later on. But overall, I'm planning to hold this Bitcoin for the long haul. That being said, history shows Bitcoin rallies drag altcoins up as well. So when that next big wave of liquidity hits, which we might have to eat some more shit before that happens, okay? But when that next wave hits, I'll be planning to cash out all my altcoins. Okay, especially if it hits by like May or June, some really crazy valuations and market sentiment can change like that. A few green candles, it's also back, baby. In that situation, I'm out, gonna go enjoy my summer. If not, I got some bag holding, guys. My guess, the bull run's got at least one more big push left, potentially a few more big pushes as we go through the ebbs and tides and all this stuff takes place in the economy. Assuming, of course, Trump doesn't cause a Great Depression with all of his policies here, then we're probably gonna be okay. Anyway, let me know what you think down below in the comment section. Thanks for watching.